Hello, this is James Robinson with the Extrinsic Value blog. Today we're going to talk about our performance in April. I know it's a little bit late. We're finally getting this up today. So in April, the market continued to work against us. The market was generally down. In terms of absolute performance, we were negative again. The fund started the value at a per share value price of $9.67. It ended the month at $9.56, which means I had a loss for the month of 1.13%. Again, this changes my total performance of the year since January 1 to down 4.4%. I was down 3.29% as of the end of March. So that makes the annual rate of return for my performance as negative 13.2% for the year. Obviously not what we're trying to achieve. For the month, I went from 85% invested up to 92% invested. I made two investments simply to garner some dividend income rather than leave my money all in cash. More about those investments later. In terms of performance against the benchmark, the S&P was down 0.27% for the month, and for the year is down 1.77%. Position reports. For the second month in a row, I was unable to convert my positions from short-term to long-term positions. This means that for the course of the month, none of my stocks had a cumulative gain since the day I purchased it of 15%. It probably isn't surprising that in a market that's been generally down, that none of my stocks are performing, but still it's frustrating that this is going on for the third straight month. To recap, I try to own 15 stocks in my active portfolio. When one of those stocks goes up 15%, I sell the original investment and transfer the profits from active to long-term holds. To be clear, that's not at 15% for the month, but 15% since I purchased it. To the left, to the right, you can see my active positions and their portion of my portfolio. So my largest holding was Sturm Ruger. Second largest holding was T. Rowe Price, and then on down the list. In terms of my permanent holdings, again, no new stock was added to this because no stock reached that threshold. At the end of the month, there were 9 positions in my permanent hold portion of my portfolio, and they accounted for 7.7% of my fund. Also, it's worth noting that most of these stocks are down since I transferred them. That really shouldn't be surprising. When something has gone from a short-term hold to a long-term hold, it will have gone up 15%. So it's not surprising that some of those stocks will fall back, especially as the market's gotten softer. But anyways, those are my short-term position holds. Cash report over the course of the month, I didn't add any cash to my portfolio in the term of additional investments. Therefore, the number of shares that I own stayed constant. 8 stocks paid a dividend in the month, and the amount was negligible in terms of cash on hand. Total dividends equated to about 0.2% of the cash on hand. I decided it didn't make sense to have more than 10% of my funds in cash, so I bought 2 stocks, Pfizer and Waddell & Reed. I purchased these stocks because they were cheap and they met my criteria, but mostly because I found the dividends to be attractive. So what I did is I plan on holding those stocks and earning dividends off the investment until I found a more interesting long-term hold. However, both stocks almost immediately jumped after my purchase. Pfizer was up 4.2% in just a couple of weeks. Waddell & Reed was up 3.2% in the same period of time. And since those numbers equaled what I'd hoped to make in dividends for the entire year, I liquidated the position and took my profits. The sum of my dividends received and my short-term trades equal to a month increase in my cash portfolio of almost exactly 0.5%. So again, not very significant, not enough to talk about, but every little bit helps. For all intents and purposes, my cash on hand remained constant. Again, my goal is to be virtually 100% in stocks. I just haven't achieved that yet, although I'm probably going to make more investments next month if the market continues to go down. So in terms of research, it may seem counterintuitive, but I don't really consider buying and selling stocks to be what I'm trying to do. What I'm trying to do is simply find solid investments. And if I do that, then obviously I'll buy them. And if they go up enough, then obviously I'll sell them and make some profits. But the goal is every day to do the research. So when I'm researching companies, I'm just trying to find stocks that have fundamentally sound business attributes that look and behave like good companies. And I'm going to talk more about what that is in future blogs. I try and analyze 3 stocks per day. That may seem like an awfully lot, but it really isn't, because about 80% of the stocks that I look at, I can tell almost instantly are not going to be stocks that I want to spend a lot of time on. And so really only 20% of the stocks that I look at are stocks that really warrant additional research. In March, I analyzed just 28 companies. That's 0.93 companies per day. And I know I've said my goal is 3 per day. I sort of hit the wall. I have been doing 3 stocks per day for 31 straight weeks. And I was just starting to go through the motions. I had lost some focus. And so I decided to take a break. And so I only looked at 28 companies. Of those 28 companies, 4 I found to be solid companies. And 2 of those companies were interesting enough to consider buying and to do further research on. Excuse me. So in total, I have been working on my investment model for 35 weeks as of the end of April. To date, I've analyzed 721 companies, and it works out to 2.94 stocks per day. And yes, I realize that my break has put me below my goal, but I think I'll get it back up probably by the end of June. 131 of those companies were found to be solid companies, which is about 18.1%. Of those companies, 32% are cheap enough to consider buying at today's prices. And that's surprising because last month there were 31 companies that were cheap enough. So even though I added 4 great companies to the number of good investments, the number that I would consider buying decreased, which meant some of the solid companies I've been looking at have actually been outperforming the market and going up. As it stands today, 4.4% of the companies researched are attractive in terms of fundamentals and price. So in summary, stock investment was slightly down for the month. We outperformed the S&P 500 by 1.3%. No company passed the 15% appreciation threshold and became a long-term investment. No new companies were added, which keeps me at the same 15 stocks in the fund as last month. Cash remained basically unchanged at 15% of assets. We researched 28 new companies, found 4 solid stocks to track, and we found 2 stocks cheap enough to warrant buying, or at least to warrant further research and consider buying. So that's it for April. It wasn't a great month, but just as a sort of a teaser, May is looking a lot better, and more on that at the end of the month. Thank you for your time.